Welcome back, everyone. My name is Adam, Rusmin,
Hello.
Victor.
Hi everyone.
Thanks for joining us today. We're going to share one real-life investment that we made for ourselves and how we basically 5 times our return on this particular stock.
Yep.
All right, so this is a real money investment that we did. And the reason why you want to share this case study with you, and we're still holding on to shares of this position, of this company.
We have sold some. Yeah, we
We trim some, right? That's why we have a 5 times return on that is a profit. And we're still holding on. But the reason why we want to share this investment with all of you who are watching this is that we want to show you how you can actually spot catalysts in a company that could potentially go like 3 times, 5 times, and maybe even 10 times over the next, how many years. And
I
this
think
is,
when it comes to investing, catalyst is so much important because you can hold an undervalued stock for a long term, but there's no catalyst, it won't go up.
Exactly. So this one played out exactly the way you guys thought it would.
Yeah.
So we want to share the thesis with you, and you can learn something from that and how you can spot similar kind of like situations for yourself, and how you could find stocks that could like triple up, and double up, stuff like that. Okay, so the company, this stock is none other than Interactive Brokers.
Yes.
All right. So this is a very popular broker. We use them ourselves.
Yes.
So why don't we go straight into the case study?
So electronic brokerage provider. So that's what IBKR does. So if you're investors, you probably have heard of IBKR, Mumu, FSM1. So IBKR is usually one of the main provider for you guys. If you want to invest in stocks or invest in options or invest in forex, you can actually use their brokerage platform, right? So why IBKR, right? So now this platform is very interesting because it can actually offers us the lowest in terms of fees, commission, right? So you don't have to incur so much commission when you buy stocks. You can actually buy it through IBKR. So for I think US stocks, you can transact on IBKR. I think it will probably cost you $1 or $2 depending on the number of shares that you buy, right? So that's one way that actually IBKR actually makes money, right? So and it also allows you to access global market, right? So this is one of the best platforms if you want to go global, right? Not just US but Europe, but Japan or Hong Kong, right? So this brokerage I think offers you, as of now, is about 160 markets. Wow. Right, for investor to really access into, right? So they have like huge network effect, right? So it's literally like, if you're an investor or even professional trader, which is one of their main customers and clients, also hedge funds, institutional investors, right? So they prefer to use IBKR because of the fees advantage, and on top of that, they not only offer you low commission, but they also gives you that kind of like market access to the forex exchange, right? So which means that if you are investing in overseas market like US, let's say from Singapore, you need to convert Sing to US dollar, right? So if you go through typical traditional brokerage route, they usually try to earn a spread from you without you realizing it when you convert with them, right? But for IBKR, you go direct access to the forex market, they don't earn the spread, right? You probably pay a very small fees, like $2, right, for that conversion itself, okay? And on top of that, they don't have any other hidden fees like your custodian fees, for that stock that you own on a monthly basis, right? So this platform, it's in terms of cost saving, is going to be a huge plus point especially for professional traders who trade a lot, right? And that's why it's a very popular brokerage platform, and it's one of those companies that I think we identified, and then we realized that it can actually scale very, very quickly. Okay, so how they make money? Very simple. One way is through commission. So if you look at IBKR, they earn money mostly through commission, and on top of that, they also earn money from net interest income, right? So commission is straightforward, right? If you buy shares in US or Hong Kong, and then you pay a commission, and that will goes to IBKR and then the exchanges, right? And then net interest income actually will come from the way they make money is so true. Net interest income is the cash that you have, right? Once you open a brokerage account with IBKR, you park the money there. Obviously that, if they invest in, let's say, treasury, they will earn interest on that, right? So what IBKR does is they just very simple. They pass on almost everything back to you on the interest earned on the cash that you actually park with them. They only take like 50 basis point, 0.5%. That's it. Okay. Right? And as compared to other broker, maybe they will take about of it, right? And then they keep it to themselves. Then they will give you the very low rate.
Some brokers don't even pay you an interest, right?
Yeah.
You just park your money there, but it stays there.
Yeah.
But IBKR actually pays you an interest.
Correct.
On your funds parked.
And it's very, very competitive.
Yeah. So that 0.5% that they take is part of their net interest income that they will earn, right? And on top of that, of course, they will also, once you have share in IBKR, you can, IBKR one day they might email you and say, hey, do you want to lend out your shares? Right? It's almost risk free, right? And then I'm gonna split the commission with you 50-50, right? So who do you lend a share to? Short sellers, right? Let's say someone wants to short Tesla, right? And you happen to own Tesla, right? Why not you lend a share to this traders who want, or hedge fund, and then we split the commission 50-50, right? So, and if you're okay with it, and then obviously that is how they earn that additional net interest income from the share that you own, right? And on top of that, they also do offer margin financing, right? So margin financing are basically the traders who want to leverage and invest, right? And they can actually use the money that they already have with IBKR, right? And then they can actually borrow from IBKR, and then subsequently they have to pay interest on that, right? And of course there's a collateral in place if the percentage of the value that the trader actually fall below, IBKR will automatically close the account to minimize that risk.
Yeah.
Right. So that's how they actually manage the risk itself. Okay. So that's how most of the net interest income actually comes from. And of course they also invest in certain treasuries, right? And yeah, so that part is a little bit of interest rate sensitive, right? And again, like I said, why they stood out for a lot of investor, traders, institutional investor, hedge fund is because the money that you put on them, most of it will earn the interest, right? They only keep 0.5%, and that's how they advertise it in the market. In the newspaper, you'll see it. Okay, other brokers like Bank of America, E-Trade, JP Morgan, Swap, they pay you 0.05 interest. We pays you up to 3% or more interest, right? Depending on the amount of cash that you have with the IBKR, right? So I think they have the right model at the start, right? So naturally, as a client, right, I'm very inclined to open brokerage with them, put my money there, because I know that my money with them will earn interest. I don't even need to sweep in or put into the money market funds, right? That would be a hassle. Some people forget to do that, right?
Yeah.
So, but that was IBKR actually offers, right? So these are the two main source of income that IBKR owns. They actually earn most of the time, and that allows them to scale up pretty quickly, because once you have customer trust, they will continue to come and open accounts. So I think based on account opening, they've actually been growing very, very fast. And most of their services that they provide are electronics, right? So that actually allows them to handle the clients in a huge scale, right? And because of that, if you look at the profit that they are making since 2009, at the time when we bought was I think in 2019, right? The margin that they are making, pre-tax net margin, is 60%.
Wow. Okay.
It's a extremely fat margin.
But their competitors are all 45 to 50%.
Yeah. So look at the TD, Trade, E-Trade, Charles Schwab. They are all between 45 to 50%. Right. IBKR, based on 2019 data, at the time that we had, was about 63%.
Okay.
Yeah.
All right. So this is a market-leading, basically, broker.
Yeah.
And the reason why we share so much about the business, because if you know that it's a good business, it's so competitive, what it offers is so enticing for traders, investors.
Yeah.
They kind of, as an investor, as in if you want to invest in it, you kind of like, hey, this is a pretty good business.
Yep.
Because there's so many ways that they are able to generate income, not just through commissions, but through the interest income.
Correct.
Yes. Yeah.
And there's so many ways they can do it. So once you realize that, hey, this is a very scalable business,
Yeah.
that's when you started looking at it. Hey, is this an investment that we can have a
And
look
firstly, is this company is the lowest cost producer, like what Rusmin said, right?
Yeah.
And they are focusing a lot on the institutional high frequency trader, which they give them the best price, So
Yeah.
all these big traders, they trade big volumes, right? And at that point of time, they are expanding a lot into more retail. Because back in 2019, right, if you want to open a IBKR account, you have to open an IBKR Hong Kong account.
if you're in Singapore.
Yeah, if you're in Singapore.
Yeah.
Right. So at that point of time, we also see them start to move into other regions and start to get more account opening. So that's the account opening. One of the catalysts, which is we are betting, is also the account growth for them.
All right. So we kind of understand the business now. What were the catalysts that you were looking that you saw that, hey, there's something that's happening here? It's a good business, but what did you see that, hey, this company could potentially explode over the next few years? And that's exactly what happened.
Yep.
What did you see?
So I think we must first talk about the situation first.
Okay.
So the IBKR has been in our watch list for a long time. Okay, but we have not invested in it, right?
Yeah.
Because firstly, this company, right? First, I know the account opening is going to grow. Second, there's something that will affect the earnings, is the net interest income, right? So at that point of time, right? What happened? The situation happened is back in 2018, right? The share price peaked at a high of around, I think, $77, right? Then when the interest rate start to cut, right? If you look at the Fed fund rate, right? You can see over here, right? They start to cut in 2019. 2018, they start to cut a bit. Then Then they peak at 2018. Then 2019 they start to
interest rates were coming down.
Right.
Yeah.
So it was really coming down already.
Yeah.
Because
so,
of the trade war that time.
Yeah. And for IBKR, they are very interest rate sensitive. Right. They will shift their policy on it, even though they can still making the money, right? But the sentiment is shift, that people know that, okay, this one will earn lesser earnings.
It's like a bank, right?
Yeah.
Right.
Yeah. So the share was being punished from $70 over dollar, dropped all the way down to 40 plus. Right. So what we're doing is, first we are betting on the recovery of the interest. So at the point of time we nibble a bit only, because the interest rate was only dropped, I think, to as low as about, at the point of time, about 1.56% back in 2019. Right. So we nibble it, betting that they are the lowest cost producer. They will get more account growth, which later Rusmi will show you the account growth. Then there's a catalyst of the net interest margin coming up, right? Because if the Fed start to spike the interest rate, you will come up, right? Because we have been experiencing low interest rate for a long time.
Yeah,
right?
Since 2008.
Yeah.
And then all the way to 2015, the rate started to go up again. So actually, IBKR, from the account opening, the equity, that the cash that they have and the clients have with them, they've been amazing this amount, and then it's like piling up. And we are just waiting for the interest rate start to go up. This whole thing will start to lift up, and then the whole net interest margin will flow into their income statement. And that's where you will boost up their whole net interest income. Yeah.
And when we are so confident about this, because it happens before 2018, right? Before around I think 2016 plus, the interest rate start to increase, and that's where you see the net interest margin of them went up, and their share price just go up.
Okay.
So we are just repeating the same pattern at that point of time. So we nibble a bit when the interest rate start to cut. And when COVID pandemic happened, right, the interest rate goes to, I think, 0, I think, at that point of time, right? Okay. Straight away, we know that the upside is very high. It dropped as low as, I think, 30 plus. So we keep averaging down. So our average price is around 43, I think. That's the around price. Okay. Yeah.
So that was the situation that you saw that IBKR was in.
Yeah. I think the thing about a lot of investor is, you only get best value when something happens to a company. There's some distress. But at the end is, how do you know it's temporary or permanent? So you need to really study the company history and see how they have been through the past, right? So like for us, we always tell our members, right? Okay, give them scenarios of different things like, hey, this is this. Which one is temporary? Which one is permanent? That's the most important thing when it comes to investing. You need to know what's temporary and what's permanent.
Okay.
Yeah. So there was also another issue that time. Kenny was actually the one that doing the research on this, right? And then he also brought up that there was zero commission. If you remember, I think back in 2019 there was a lot of talk about Robinhood, right? And especially COVID, when it went off, and then suddenly Robinhood became very popular among millennials because it's zero commission. So at the time the market were very concerned about IBKR, that zero commission might hit their commission revenue, right? Because now everyone want to go to zero commission. Who want to pay commission, right? So but that time, if you understand IBKR business model, right, and Robinhood business model, actually what Robinhood, right, even though they say zero commission, they still make money from the order flow, which means that if you put in order with Robinhood, right, you may not need to pay the commission, but actually on the back end, they actually sell it to the market makers, right? The market maker may not give you the best price that you actually entered.
So you're buying shares slightly more expensive.
Right, in terms of the spread, right? And then that's how Robinhood actually make money, by selling the order flow, right? And IBKR at the time, if you look at their clients, a lot of them are professional traders. They are not like trying to save the commission. They want to look at the overall saving, right? Not just the commission, but also the interest that they are earning on the cash that they have with IBKR, and also the margin. And if you look at the interest margin that IBKR is charging to the traders who want to leverage, they are the lowest, right? If you compare, as of now, I think IBKR is like charging per year, depending on the quantum that you have, is about 5.8% the highest, right? And if you compare with E-Trade, Fidelity, Swap, right, so the margin account, the interest rate is about 12%. That's a huge disparity, right? So this is on the per year basis, right? So a lot of traders will be very tempted to borrow from IBKR. They would rather use IBKR platform because they save a lot more, right?
I think the most important thing is sometimes things are free for a reason. Right? There's no such thing as free thing, You need to understand there's something that will take off from it when you get something for free.
Yeah.
Okay.
Right.
So if you're not getting the best price in terms of price execution when you key in the order, and you're not getting the best interest rate when you borrow money from the broker, obviously the trader, the institutional, the hedge fund, they're not going to switch to commission free just simply to save that a few dollars, right? Yeah. So that's why we know that at the time the core business will remain intact. In fact, IBKR launched IBKR Lite. Right, and then they want to also offer zero commission, and their revenue model is the same. They sell the order flow to the market makers.
But that's why
right?
IBKR like.
Yep.
Yeah, but then that is not a big business for that,
Okay.
right? Their core business is still like, their hedge fund clients, their institutional investors. Of course, now their retail clients also growing very, very fast, right?
Yep.
So that was actually, there were two main issues. One is the interest rate cut, and then also the zero commission, right? So at the time, we analyzed the situation, and then we kind of concluded that all these are transitionally, right? So, and we're going to invest it for the next 10 years, and then just nice, I think 2020 COVID came, we price dropped more, we added more. That was the time where we were very busy buying.
And interest rate was at the lowest, so that means my upside is even higher. And their earnings start to show, because if you look into the net interest margin, net interest income over here, there's this chart revenue by segment, right? You can see, even though when they start to cut interest rate in 2019, right, they are still going up in terms of the profits for the net interest income. But the real impact happens only in 2020. So there's a delay effect, right? So when the delay effect really show, the share really tank even further, right? Yeah.
So it was like, it's a company that, it's going to explode. It's just a matter of when explode in terms of share price. So we start to park our position and we keep it long term. And then I think fast forward 4 years later, the share price doubled. So we started to trim. And then I think earlier this year, I think few roundtables that we talk about, we have been trimming US share. IBKR is one of those companies that we have been trimming.
Okay.
Right? But we still keep quite a lot of shares.
So at the highest return, it was 5 times.
Five times.
I think it was like
slightly more than 5 times.
Yeah,
I mean, the share price returned back
Yeah.
up. You see now the situation back to normal already.
Yeah.
Yeah.
Okay. So we actually got out at a pretty good price.
Yep.
Now it's come down a bit. So basically, just to summarize, IBKR as a whole is a great business. A lot of competitive advantages compared to what's out there in the market. But what was made the difference between regular investments and this one is that the catalysts were in place.
Yes.
All at the right time.
Yeah. No, but we know, but we analyze the situation to be temporary.
Yes.
Yeah.
Correct.
I mean, if you analyze the situation as temporary, it become permanent. Then that's
Okay.
we'll go another.
So in this case, like the business is great, but what they were facing was it's interesting.
Yeah, and we bet that the zero commission one won't last, which is actually fact. You turn out, you look at now, everybody a lot of the Singaporeans that I talk to them, they are in IBKR.
Okay.
Right. And I don't hear people talking about zero commission nowadays.
Okay. And what caused the share price to go up was because of the interest rate going up again.
So that was the and also the people investing, account flow was a lot, and a lot of people investing in the markets.
Okay.
So they're making also a lot of commissions also.
Okay. So tell us more about how that played out, like how it went up.
Okay, so I think Rusmi has a chart on the account flow also.
Yeah, so you look at the time 2019, their client account actually has been actually growing at 18%, and since then until now, 2024, all right. So I think their accounts growth have went ballistic, right? 37% year on year.
Wow.
Last year also because COVID-driven pandemic, and that actually leads to a lot of people opening a brokerage account with them. And the reason why people open with them is because they are the best, right? And globally, in terms of brokerage platform, in terms of fees, in terms of like forex exchange conversion, in terms of like almost everything, like interest on your cash that you have with the broker, right? And then obviously when you have more brokerage account being open with them, client will put money with them, and that will grow their client equity. And the client equity is very, very important because it helps them to drive that net interest income. Right? When interest rate goes up and plus your equity has been like growing, so there's the doubling effect, and that's why it caused the whole net interest market income actually to grow actually very, very fast, and that leads to their higher profit over time, right?
Yeah.
So their daily average trading volume also has been growing because of the higher client accounts over time, right? So that those are the catalysts that continue to drive IBKR, and why there's a catalyst because they have the right business model, right? So this part actually is very, very important. Okay, and of course, second part is that we didn't enter at like $80 type of price range at the time when I think in 18, just right before the
Higher,
trade
about
war.
70
They were
$70
70 over.
77
Yeah.
at the highest.
Okay.
So their valuation was a bit stretched.
High.
High.
Yeah.
So we didn't pay for it. Of course, at that time you pay for it and you hold it until today, you still like 3x.
Okay.
Right?
Yeah.
But you won't get 5x.
Yeah.
Like because we bought, I think, at a good price. And valuation is very, very important. And we actually got in a very good margin of safety. And of course, on top of that, we top up even more during the COVID. And that actually gave us the very low average price.
Okay. So this is one investment thesis that played out exactly the way you thought it would.
Yeah.
Very, very satisfying.
Yeah.
Very
Actually,
satisfying. All right.
Yeah.
So I think what we can talk about is that we want to find out how we can actually, the thing is about this, because it played out so nicely, you basically 5 times your return.
Yeah.
And what we want to teach people is that how do you find companies like that? How do you find catalysts that, if the company is in there and it's a temporary issue, you can go in and strike and the valuations make sense, and then you can potentially 5 times your investment.
I think we knows that to us is we are betting that the profits will go up, which you can see from here the chart, right? The profit from 2019 went up from 161 million to 700 plus million, right? So that's what we're looking. But when the company get 5 times, right, it's not only the profit helping also the PE expansion. So at the point of time, we knows that the PE dropped and it was a compressed PE, and there's a few catalysts in terms of like the net interest margin, the account growth, and the possible PE expansion. And that's why the PE have expanded, and that's why we start trimming. And that's also contribute to the growth of the share price also.
Okay.
Right?
Yeah.
All right. So if you're interested to find out how you can actually spot companies like that, do check out Alpha Quadrant. It's open right now. So we open our courses once a year. So we did dividend machines earlier in the year for those who want to invest in for dividends. But Alpha Quadrant is for people who want to invest for growth and to look for companies like this.
Yeah.
Right.
Where you can find good companies, great business models, but you want to find companies that could potentially 2 times, 3 times, 5 times, because they're in a specific situation that is almost like ripe to explode.
Yes.
So this is what happened with
Yeah.
IBKR.
Yeah.
So if you want to learn how to do that, go to alphaquadrant.com. It's open until the end of May. You can go check it out. And then it's basically an entire course where you can learn how to do this as an online course. What else is there?
So we also have the live webinar that we're going to conduct. So in the live webinar is sort of a bit different from the course is more theory, but the live webinar is how do you use it? How do you do it, right? So that's the live webinar. It's more practical.
It's the
so
web class,
you have to go through the both to really understand things. Then at the end, I'll show you case study of companies that we actually did, right? Like IBK, and also we also show you 2 undervalued companies that may have the same situation.
So you're going to share 2 potential investment ideas that is similar situation.
They are niche business,
different industry,
dominating in their niche, right? Net cash, 0 debt, right? But they are hurt by temporary situation.
Okay, so you're going to share that during the webinar. So you go to Alpha Quadrant, you can sign up for that. You can find out what that is.
Yes, correct.
And of course, you have the online course with basically all the video lessons you can access anytime you want. And of course, they have a forum where they can ask you questions about investing anytime you want.
Correct. And essentially the course is going to teach you what are the characteristics going to of the company they're going to help that company to grow 5x, 10x over time, right? So in the course, you're going to learn what are those characteristics and how do you find those companies that can double up, triple up your money over the next 5 years or 10 years.
Okay. Yeah. All right. So if you're interested, just go to alphaquadrant.com. It's open right now. So whenever you're watching this, it could be open or close, but it's open right now as we are releasing this video until the end of May. All right. So to go back to this case study, one of the main things that you have to do is, to care about so much is basically valuation. So you need to know when to buy. So like you mentioned just now, at $70 plus, you didn't want to invest in.
It was more on the high side.
It was on the high side. And you waited until it came down.
Yes.
So valuation is very important.
Waited when it came down, and there's a situation for a catalyst to happen. So that's the most important thing. The situation for a catalyst to happen. Right? It can come down, but there's no situation for a catalyst to happen. I can buy, but it can be down for a long time.
Okay.
Right. And so that's an important thing.
And on the other side, you also use valuation to wait until to tell you when to sell, right?
So at the time, at $70+ we calculate our own intrinsic value. In the Alpha Quadrant, you learn how to calculate it, and it kind of shows you it's overvalued. So when it's overvalued, usually we don't pay for it. Right. And then until when the prices started to drop, the intrinsic value, the time was we calculated about $62, and it dropped to like 40 over dollars. It kind of like makes sense for us to start to put our money there and then invest for a long term.
Okay. So when did you know when to sell?
I think the first thing is really the okay. The thing about you need to understand the company. Not every company you can hold for long term.
Yeah.
Like for me, to me, right, IBKR, they are interest rate sensitive, right? They move up and down with interest rate and also the markets and all this, right?
Yeah.
So when the markets get too bullish, or the interest rate is high, right, which is right now, right, and their earnings start to show that they trim, I will trim their position on, right? So because it is sort of like a semi-cyclic, but it's on an uptrend for this company. But if you want to hold and ride all together, it's also okay. But to us is, I think we can sell the position and goes to the other more optimize the returns with other undervalue investment. So because at the end of the day, it's very easy to know when to buy.
Okay.
Right. But the most important is you must know when to sell. Right. Like there's always a saying, right? The money is not yours until you cash it into your pocket. Right. So to us is, I feel the valuation is already stretched, and it's not compressed, not stretched because of compressed earnings. They are stretched because they are doing very well. Right. And it's traded at a very, very optimistic thing, right? So we start to trim our position, which is early January. So that was the 5x, right? Before that, we already trim a bit to take back some profits first. So we already locked. So anything that is inside IBKR is already pure profits. But yet we sold, it went up about it went up a few more times until 200 plus, right? I think we sold around the 80 plus mark. Then from 80 it shoot up to 200 plus. So we just keep
talking about
trimming
share
back.
prices.
Yeah. But we are still owning positions.
Yeah.
We are still not, because you don't sometimes you don't know when the market will get even more optimistic, right?
Yeah. The thing about IBKR is that their business will continue to grow over time, right? It's just that there's a cycle to it, right? So sometimes their new low might be still higher than the price that we sold, right?
Okay.
So that's like it may take a long time because with interest rate now reversing down. Obviously, the thesis is not going to be it's going to be the same as compared to the time when we bought it. Yeah.
Okay.
Yeah.
So basically, knowing how to calculate intrinsic value is so important to know when to buy and when to sell.
Correct.
Because if you don't know that, you can't.
You can maximize your returns from there.
So if you don't know, then sometimes you just things are too expensive, and then prices drop. Then it's like, oh, why did I buy it then?
So you must really know how to calculate the risk reward. That's the most important thing.
So we teach people how to calculate intrinsic value in Alpha Quadrant as well.
Yeah.
And I think this is a cornerstone of the course, because I mean, you can learn all the other things, but valuation is so important, because then it gives you a benchmark of, oh, this is cheap or expensive. And if you don't, you're kind of like going in blind.
And also the thing about valuation is that if you just value like that, it does not means anything. Right? Everybody can do valuation. But how do you link the valuation with the business and the situation, and you decide? That's the most important thing.
Okay.
Right? You just look at value, you go to any university, everybody still teach you how to value. But how to link the valuation, the current valuation, with the business and the situation, that's the most important thing.
Okay.
So that's what we teach in the course, how to link the three of them.
So if you're interested, just go to alphaquadrant.com. You can check it out. It's open until the end of May. And basically, you can learn how to do, how to look for companies that are potentially, 3 times, 5 times. Because they have the right value, the right catalyst, and the right business model. You put it all together, and we teach you how to do that as a framework. Everything's, you teach everything there. Okay. So go to alphaquadrant.com if you're interested. Is there anything else? Okay, moving forward, what are your views on IBKR now? Like, just in general.
I think generally we are more on the sell side for this company, right? I mean, we sold at 200, I think 200 plus. Then it dropped back down because of the Trump, and now it came back up to 200 again, right? So if the situation it get even more expensive, we will be a net seller for this company.
Okay.
Right? Until the interest rates start to go down and things start to reverse, then we will look at and do valuation, and we'll see how the situation like.
But if it gets cheaper, we might add.
But the business as a whole remains at this point in time, right? Fundamentally,
they're still very strong. Really, it's very hard to fight them at this moment.
So I guess interest rates will be something on your radar as well for this company.
Yes, correct.
All right, so you'll be watching that.
Every company are unique. You need to understand how things move with different companies.
All right, so with that, I think that's pretty much it for IBKR. All right, so we just wanted to share this case study with you, how you basically go through the process of picking an investment like that. Basically, it's like basic picking your brains to understand how you do it, the investment rationale, the decision making. If you haven't done something like that before, and this is eye-opening for you, I hope you really like this roundtable. But this is one example of how you can apply what we teach in Alpha Quadrant to a company like Interactive Brokers, and that we 5 times our investment. Of course, you can do this with other companies as well. And we're going to talk about 2 of them at the live web class for Alpha Quadrant. All right, so I think that's pretty much it. All right, so my name is Adam Rusmin. Victor,
Thank you.
we hope
Thank
you
you.
like this roundtable about how you basically look for catalysts within companies that could potentially push share prices up 5 times, 3 times. If you want to learn how to do that, go to alphaquadrant.com. Of course, any questions about this, put them in the comment section. We're happy to answer them, and subscribe to our roundtable. Many more roundtables coming up, and we'll see you again.